Welcome back to Rekt Radio, the only show on the airwaves that sees a software company buying billions in Bitcoin and doesn't call it a crisis, but calls it the future. I'm Sunny, and folks, the corporate takeover of crypto isn't coming, it's already here.
And I'm cool. I'm here to point out that when a software company decides to become a full-time crypto hedge fund, it's not a takeover, it's a desperate cry for attention that usually ends with a very angry letter to shareholders. Let's get into the madness.
It's not madness, Cole. It's the most brilliant corporate strategy of the 21st century. Let's talk about the big one, the Titan, the company formerly known as MicroStrategy, which has now fully embraced its destiny and rebranded to just Strategy. And what a strategy it is! They have officially stocked up over 499,000 Bitcoin. That's more than $43 billion. This is no longer a test run. This is the playbook for how every public company will protect its value for the next 100 years.
A playbook for corporate suicide, maybe. Let's be perfectly clear about what's happening here. This isn't just allocating some cash to a new asset class. The company has completely transformed itself into a leveraged Bitcoin bet. What are the risks right now? The risk is that a business intelligence firm has abandoned its core competency to become a highly volatile, publicly traded Bitcoin proxy. Their stock price doesn't reflect their software sales, it reflects the daily whim of the crypto market. That's an insane proposition for shareholders who thought they were investing in a tech company.
They are investing in a tech company, a Bitcoin development company. Michael Saylor didn't just buy Bitcoin, he reshaped the entire firm around the asset. They're pioneering a new model. What could this become? It becomes the standard. Think about it. Why would any company let its treasury get eaten alive by inflation sitting in a bank account earning nothing? Saylor saw the macro risks coming from a mile away back in 2020 and decided to proactively move his corporate treasury onto a global, decentralized, appreciating asset. He's not just playing the game, he changed the whole stadium.
He strapped the entire stadium to a rocket without a steering wheel. You're celebrating the vision, but let's look at the execution. The data shows that these massive multi-billion-dollar buys don't even guarantee a positive market reaction. After their largest ever purchase, over 55,000 Bitcoin, the price immediately dropped 4%. After another recent $2 billion buy, the market crashed from 96,000 down to 86,000. The idea that one company, no matter how much they buy, can bend the market to its will is a fantasy. They're just as exposed to the brutal volatility as the rest of us, except they're using shareholder capital as their casino chips.
That's just short-term noise. Of course the market is going to fluctuate. You can't judge a multi-decade strategy based on what the price does for 24 hours after an announcement. The key is the average price. Their average entry across all these buys is around 66,000. Look at where Bitcoin is today. The strategy is already a monumental success. He's not trying to time the market, he's trying to own the market. And it's working so well that others are now following the playbook. Look at Metaplanet in Japan, the Asian MicroStrategy. They're doing the same thing. It's a global movement.
It's a global contagion of bad ideas. And Metaplanet is a perfect example of the risk. They just proudly announced they bought another $13 million worth of Bitcoin at an average price of over 96,000. And what happened hours later? The price crashed below 88,000. They lit $13 million on fire to signal their virtue to the market. It proves my point perfectly. Having the strategy is one thing, executing it without getting completely wrecked by volatility is another. These companies are telling their investors, trust us, we know how to time the most volatile asset class in human history. It's the height of corporate arrogance.
It's the height of corporate conviction. They are buying for the long term. They believe in the technology and the network. Metaplanet isn't worried about a single-day drop because they have a plan to hold 21,000 BTC by the end of 2026. This isn't about trading, it's about accumulation. It's a fundamental shift away from depreciating fiat currency toward a sound money asset. Every single one of these purchases, even the ones that are temporarily down, sends a signal to every other CFO in the world. The ice is breaking. The risk is no longer buying Bitcoin. The risk is not buying Bitcoin.
The risk is telling your board you have a BT yield target while your core business is supposed to be selling software or, in Metaplanet's case, designing stuffed animals. It's a profound distraction. These are not asset managers. They have no special insight. They're just riding the same wave as everyone else, but they're doing it with public money. And that concentration of risk is something that I think is being wildly underestimated. But I know when you can't win on fundamentals, you turn to your magic chart. So let's turn to the king, Bitcoin, and see what the technicals are telling us.
Absolutely, because while you're focused on the corporate FUD, the chart tells the real story. I've got the one-day technicals from TradingView pulled up, and it's a thing of beauty. The overall summary gives us a clear buy signal, but the devil, or in this case, the angel, is in the details. The moving averages, which measure the deep, powerful underlying trend of the market, are flashing a strong buy. That isn't a suggestion, Cole, that's a statement. It's the market's deep current, and it is pulling us inexorably higher.
You're mesmerized by the rearview mirror again. The moving averages are a lagging indicator. They tell you about the rally we just had. They're a history lesson. Let's look at what's happening on the dashboard right now. The oscillators, the instruments that measure real-time momentum, buying pressure, and market sentiment, are sitting at neutral. So you have a memory of a strong buy party from last week, but a live reading of an empty room. That's a massive divergence, and it's a huge red flag.
It is the single most bullish setup you could ask for. You're seeing an empty room, I'm seeing a launch pad being meticulously prepared. A strong buy on the macro trend combined with neutral on the short-term oscillators is the definition of healthy consolidation. It means the market's long-term conviction is unshaken, but it's pausing to build energy, to absorb sellers, and to establish a new higher floor before the next explosive leg up. It's not a red flag, it's a coiled spring. This isn't weakness, it's controlled power.
It's buyer exhaustion. That neutral reading is the sound of an engine sputtering. After a strong run, when the bulls can no longer muster the momentum to push prices higher, the market just churns. It's a stalemate. You see a coiled spring, I see a bull trap. It lures in the optimists like you who are looking at the lagging trend, while the real-time indicators are screaming that the buyers are tired and the sellers are starting to circle. This isn't a launch pad. This is the market taking a breather at the edge of a cliff before it keels over.
That's all for this episode of Rekt Radio. I see a new corporate playbook being written in real time by visionaries and a market leader gathering its strength for a run that will make today's prices look like a distant memory. The future is building now. Stay bullish.
And I see public companies making reckless gambles with shareholder money and a chart that is flashing every warning sign of exhaustion. Protect your capital. You've been listening to Rekt Radio.